choose to isolate some weak tech players going into that, like ARC or something like that. So any questions on Qs? Give me a 5 in the chat if there are no questions. Give me a 10 in the chat if there is. And if there is, post your question. You have a question, Tech Savvy? 10 is you have a question.
Choose to isolate some
5
weak
is you
tech
have no
players.
question. Cipriano, you have a question? 10 is if you have a question. 5 is you have no question. Renew has a question. What are the support and resistance levels for Q? 310 to 315 is the resistance zone, and 300 is support. Cipriano says, are you looking for a put spread on Qs? Possibly. Maybe a bear call spread. Maybe a ratio spread. I haven't quite decided what is the play that I want to do in it, but I'm kind of looking at 3 potential options there, yeah. So I haven't quite decided. Any one of those 3 is workable to me. Because if volatility does get a little bit of an uptick, then trading ratio spreads has some attractiveness to it because you are, especially if it's a put ratio spread, because the puts will be cheap on the push up, but yeah, we can sell the puts a little bit further out and we'll be taking advantage of some of that increased in volatility. And maybe there's some attractiveness, so yeah, that's kind of what I'm thinking right now. Yeah. It seems like there's a couple more questions. Tech Savvy says, if FOMC gets a 50-point increase, I think it'll be bullish. Since 50 points is already expected, please correct me if I'm wrong. I don't think we can look at it just as the number of basis point increase or anything like that. I think we have to look at it as in terms of the language, their comments around inflation, future rate increases, what's happening with quantitative tightening. I think we have to look at it we can't just look at it as like, oh, it's this rate increase or this not rate increase or something like that. Forward guidance will matter. Inflation concerns will matter. So I think it's multifaceted. I don't think it's I don't think it's that. QT is the biggest factor? Maybe. I mean, they're only the total amount that they want to tighten. They built up in quantitative easing, they built up their balance sheet by 4.5 trillion, but the tightening, they're only wanting to reduce it by 1 trillion, which is, it's not as gangster as everybody thinks it is. And so, I look at it as like, we can't look at it as one thing as the most pivotal thing. I think we have to look at it as all of them present an opportunity to create fires. Inflation could create a fire. The high gas prices and agriculture prices can create fires. The housing market, overheating could create fires. If they're thinking, hey, we're going to have rate increases all the way through the end of the year, there's a lot of different things. And I think we have to look at it as how do we consolidate that into one overall view, and what are the flows in the market? Because then the bottom line is it really matters what's the flows in the market. That will determine. Yeah. Holding Aces says, Chris, I find myself chasing too many trades and jumping in too early. What advice would you give to correct this? So it's hard to say just based upon that, Holding Aces, but from my experience, when somebody is consistently chasing trades, it could be that they're trying to make up for some losses that they have. It could be that they feel like they've missed some trades and now they feel like they have to make up for that. And when it comes down to it, if somebody is chasing trades, that means that they're in a state, like a mental physiological state, whereby they're not following their trading plan or being patient with the position, and then letting the market pull them in instead of being calm, cool, like a calm and relaxed and cool cucumber, so to say. So if you notice, you don't see me chasing trades, and that, I am patient. I wait for my trades, and that's because I execute my strategies as is. I don't let the market pull me into things. I execute and wait for that. So generally, from my experience holding aces, it's usually a mindset thing. And it could be multiple mindset things. There could be multiple reasons. And so in terms of correcting it, we have a lot of techniques in the Advanced Traders Mindset course. I'm not sure if you're in that. But the most simple technique I can give you that I recommend everybody is If you feel like you need to chase something, the first thing you should do is slow down your breathing. Just slow down your breathing, stop mouth breathing, switch to nasal breathing, take a few breaths and relax your nervous system, and then still see if you have the impetus to take that trade. And so just kind of pausing and interrupting the cycle that normally is present when you try and chase trades. If you can interrupt that, then that helps. But if the problem keeps persisting after that, then you probably need more mindset methods and practices to work on that. And that's what the Advanced Traders Mindset course is for. So yeah. Yeah, I hope that helps. Okay. So covered cues, SBLK. So SBLK, I feel like this is kind of what I'm seeing on SBLK. Let's start with the weekly. Holding aces, don't ever think there's a silver bullet. There is no silver bullet when it comes to mindset issues. Usually mindset issues are either psychological, neurological, or both. And so those are not things that like one thing fixes it. That's something that takes time, and you just have to consistently work on your mindset. And so remember what I said, one of the 4 skills you need to make money trading. You need these 4 skills to make money trading. So you need buying and selling decisions, which is, you need a methodology for making buying and selling decisions. You need risk management. You need analytical, and you need mindset. And if you're not working on this mindset on a regular basis, then you can't expect your mindset to correct itself. That would be like not exercising and expecting your muscles to get stronger and bigger and have more endurance. So this is all 4 of these skills. You always have to be working on these, and you should have practices to work on these every single week. If you're not, then the skill is just going to it's like a muscle, get weaker and weaker and weaker. I don't know whether you're doing practices holding aces to work on your mindset. My guess is most people are not doing it. And so you have to make it a regular part of your trading routine to work on your mindset. I, for 22 years now, have been every single day integrating mindset practices into my daily life. And so like every morning after I get up, I do a yoga and meditation practice. Right now, it's not that huge. It's maybe a 30-minute practice, which to me, I would consider relatively insufficient. But my schedule in this time zone is so difficult for me to do it. So I feel like 30 minutes is, enough to hold it at bay. And then when I get into a new time zone, I could start doing an hour. So every single day I spend an hour a day working on that. Rodrigo, good to see you. Hope you're well. So remember holding aces, the 4 skills you need to make money trading. So buying and selling decisions, risk management, analytical skills, and mindset. And you have to work on all 4 every single week. Just like a professional athlete, they don't just, like a football player like Tom Brady doesn't just throw the football. He works on his mindset. He does physical conditioning. He does his football skills itself, and he does analytics. Like he's famous for spending hours every single day watching film. It has nothing to do with throwing the football, and yet he's a quarterback and he watches film. In fact, in Tampa Bay, when Tom Brady joined the Tampa Bay Buccaneers, they realized his film skills are so good at analyzing film that he actually has his own private film class with his receivers, and that they do his own film class. Like that's how fucking good he is. Normally that's like the coach and one person doing film class. No, Tom Brady has his own film class where they watch film on players that they're going against and look at tendencies and stuff like that. So you have to kind of have this mindset of like, hey, I need to work on all these skills every single week. So super, super important. 1 second here. Need to text homies. Okay. All right. So SPLK, we're long shares on this. This is a partial position getting into this right now. We like being long, or at least a partial position at the monthly VWAP. So we got a few cents above that. Beyond this, we'll add a little bit more size. So we feel like here's where the monthly VWAP is. The monthly VWAP is right there. And so we wanted to add a little bit of size. We like the rejection off it right now. If it breaks this, then we're going to add a little bit more size down here. That's why we've done 1/3 of our position here, and we'll do 2/3 of our position there. Meanwhile, we're going to sell calls against this. We're going to collect the dividend on this. This is a massive dividend at 16%. And so we want to keep, building a position in this now that we feel like it has some stability in it. If it does break lower, then we'll add more here, and then we'll just sell calls and neutralize the risk on that. So that's pretty much SBLK. UNG, we said we felt like it probably would fade around 30, and it has. The gas inventories report came out at 7:30 this morning, or 7 o'clock, and it sold off from that. So we expected that this was, showing some weakness as we get into the 30 area, and that is now manifested. In terms of UNG, the way we're going to play it right now is we are looking for a little bit more of a pullback. I may be interested in accumulating some size around here, but I'm really looking forward towards hold on 1 second. I'm really looking forward towards a move a little bit lower. So the option positioning that I'm seeing on my end is saying, like, look, there's mild option support around 29, 28, but the majority of the option support comes in around 25, 26, which is really this kind of zone. So let me zoom out to a 4-hour. All right, so the option support I'm seeing right now in terms of flows is coming in and kind of like in this area. The biggest bulk of this is here. So I'm okay with adding a little bit of size here, but I want the majority of my position to be in this zone right here. It's not just that the option open interest and flows are really strong there. It's also that the dealer hedging impacts, the lower we go, the more the dealers actually are no longer selling, they start buying. So when I look at potential dealer hedging impacts on this, I look at, okay, we feel like, hey, it's not just good open interest, but the dealers actually have to start buying shares as we get lower and lower and lower. So I want to use that option dealer hedging impacts in a favorable way. So that's why we're waiting on UNG for a little move lower, because the lower it gets, the better it is in terms of hedging impacts for us. Any questions on that before we move on? So give me a 10 in the chat if there's no questions. Give me a 5 in the chat if there is, and if there is, post your question. And if you hear that buzzing in the background, I'm just raising my standing desk right now. All right, sweet. 10s across the board. Copy that. Baghdadi, good to see you. Haven't seen you in a few days. Hope you're well. Tess, hope you're well. XLE, kind of a similar thing. We feel like we want to wait for a little bit of a pullback. So no trade on XLE right now, but we are going to wait for a dip on that. We would like a monthly VWAP potential play on that. If we get a UNG position, then we'll just either take an Oxy position or an XLE position. Oxy is kind of in the same thing. We're just kind of waiting for a pullback on them. We don't want to chase Oxy or XLE at this point. The flows on our side and our analytics suggest that it's overextended at this point. So we don't want to chase this higher. We want to wait for that pullback on that. SO is a utility stock. We like having some exposure to utility companies this summer, especially ones that have good dividends, which this does at 3.6%. So we're looking at SO, which has a good broad base of energy exposure to not just gas and electricity, but also nuclear. So we're going to wait for a pullback on this one into this kind of zone here, and we'll accumulate a partial position here. So we probably do 1/3 size shares around there, sell some calls against that, and then look for a little bit move deeper, which we can show you on the 4-hour. So here's where you'd accumulate our first position. And then our second position we feel has got really strong support here, not just technical, but the open interest and the hedging flows from dealers suggest that at this point they're no longer selling, they start buying. So we're going to reserve the majority of our size for down here, but we might add a small position around here, and we'll look to neutralize the risk on that long share position with options. GME, as you all know, we're short GME. GME had earnings, and it was very, a lot of spikes on both ends. The volume today suggests that it has a little bit of a push, but GME starts to become really overextended once we get into this kind of 135 to like 140, 145. So the higher GME goes, the better it is for us to sell this. If you notice the volume on the shares today, is nowhere near the volume on this day right here. And it's barely tracking this kind of volume day. Keep in mind, these were low liquidity days. And so GME has not been able to recover those highs. We think GME is a fade into resistance. So we already have one short position. We will look to add to our short position if it goes a little bit higher than that. And then we'll start to target, if we get in this kind of 135 to 140 range, then we'll start targeting strikes in the kind of 125 to 115 range. We will trade GME not with shares. We'll do that with fixed risk option strategies. We want to neutralize any potential risk if the shares start to explode or something like that. So fixed risk option strategies, it doesn't matter how high GME goes, our risk is still the same. So we will look to trade that, but we want to continue to short GME and fade that on pullbacks. Right now, it's holding above VWAP. You can see the price action structure has been very positive so far. Impulsive, corrective, good spike on the volume there. Breakout of the impulsive corrective structure to the upside on good volume flows. But, volume is weakening a little bit. So far it's holding VWAP. We're probably expecting another leg up, which could stall here. And if it does break this, then it'll start to stall in this range. And then we'll look to start to fade it. So we're going to keep an eye on the flows on the day. We're going to keep an eye on the volume, the price action, the open interest. If we look at today's flows on GME, so if we look at today's flows on GME, I'm guessing a lot of these are short dated. So 261,000 options prior to today. GME had about 312,000 calls and 310,000 puts. So very mixed between the two, but 40% of these options are expiring this Friday. So if there are a bunch of calls in the market, they are going to be under massive pressure to close today and tomorrow. Heavy theta decay. You can see right now that traders are buying a little more calls than selling, and they're selling a little more puts than buying. So that's a bullish flows on the day. So we want these to exhaust itself. Implied volatility has come down from the pre-earnings. Like pre-earnings was like 230, 240%. It's already come down significantly. And the more that comes down, the more pressure that puts on these long calls. So with a Vega exposure of 3 cents, basically, if this comes down 10 percentage points in implied volatility from, say, 151 to 141, that's a 30-cent loss in the option itself. If it comes down 50 percentage points, that's $1.50. And in an option that's $4 or $5, that's a significant amount. So this Vega exposure today is going to be very heavy on this. We expect the vols to come down probably more towards this is pretty significant. We expect the vols to start to normalize around 100%. So if it comes down 50%, that's a significant loss in those long calls. Keep in mind the theta exposure is massive. So anybody who's long, say the current 127 or what's the biggest strike today, these are the biggest strikes by volume and open interest. And so every one of these, they're going to lose $1 in value, and this option's only worth $1. So by the end of the day, this option's worth nothing if the price stays exactly where it is and nothing changes in IV. If you're holding these at the money options, you're going to lose $2.60 between now and the end of the day. So if your option's worth $5, theta decay alone is going to eat 50% of that value of that option. So this is a massive amount of pressure that anybody holding these long calls is going to be under threat, so to say. And that's just going to create a lot of forces, a lot of impetus that if GME stalls, IV stalls, these long calls are going to be like, look, I'm bleeding too many deltas. Too much theta decay is coming up. Too much loss in the implied volatility. I'm out. If the calls start coming out of the markets, that pulls away the support, and then the puts start taking over. So I feel like whatever it is, whether it's theta or loss in IV, these long calls are going to be under pressure. Baghdadi has a question. What would drive theta to be this high? The options are expiring tomorrow. That's why. And remember, theta is always highest for the at-the-money options. So it will always be highest for that group around the at-the-money because the at-the-money options are the most vulnerable to changes going up and down. These deep in the money options, they have very little threat, therefore low theta. These deep out of the money options, very little threat, so a lot less theta. So yeah. So hopefully answer your questions. Okay, any questions on the GME at this point? Put a 10 in the chat if there are no questions. Put a 5 in the chat if there is, and if there is, post your question. And hold on a second, I just want to check on my homies. Check on my homies. There we go. Okay, cool. Sweet. All right, so let's look at open Q&A right now. So we've gone over the market commentary. We've gone over our live trade on SBLK, our rationing for that. We've gone over our game plan on SPYs. We've gone over our game plan on Qs, UNG, XLE, Oxy, SO. So we've already got one trade, and we feel like by the end of the day, we should have 2 to 4 more trades. And at least by the end of the week, we should have probably 6 new trades between now and the end of the week. Nothing else really to go over on our trades right now. We're just going to ride out the clock on UVXY and continue to bank some profits on that. DBC continues to perform. GME is underperforming, which is fine. We still got to the end of this week for this to materialize. And if we lose on this, it's fine. We'll sell it higher. SBLK, this is a medium-term swing trade, so nothing to do on that. And then VIX, we're just kind of waiting till the OPEX. So with that being said, let's look at some. I don't think I had any new questions for Chris. And I did have some new trades here. So let's take a look and see what the newest trade is. Okay, so Sean wants to look at a long PSTG bull call spread, 25-29 strikes. So buying the 25s, selling the 29s. Sean, do you mean June 17th? Sean is going back in time. He's going to trade options that no longer exist. I love it, Sean. Okay, June 17th, $5 debit but bought this morning. So let's take a look at it. And which one do I want to get rid of? PTSG. PTSG. Wait, what? Is it PSTG? PSTG. My bad. Pure Storage. What are you? Okay, interesting. So 25.29 for June 17th for $5. Let's take a look at that. Analyze your trade in real time. So only monthly options on this, which leads me to believe it doesn't have a whole lot of close, but you got enough. You got enough open interest. So prior to today, 100,000 calls, 35,000 puts. So you got enough in terms of liquidity wise. So let's take a look at this. Wait a minute. This thing's already at $28. So, you bought it right around the open. Oh, okay, copy that. Let's see what this thing's worth at this point, because there's not much to analyze now. You're already deep in the money. So you bought it for $5. What would it be worth right now? 25.29, $2.90. So you're already up almost like 200% on this sucker. Yeah, you're already up 200%. At this point, I would just watch the price action in real time on the 5-minute chart. So why are my day trading indicators not up there? Hold on one second. Let me get my 2 day trading indicators. So as you know, I use 2 indicators for day trading, and it should be the green, this thick. It should be at a 9. Cool. And then the purple, I don't know why it's not saved on this template. 20 on the 5-minute chart. That should be purple. There we go. And there we go. Okay. All right. So at this point, I think you want to keep holding this right now, this open trade. Nice, strong, impulsive move on good volume. It kind of has a little bit of resistance, but the lows are building right now. So for right now, I would hold this, and I would probably put your trailing stop right below that spike right there on the day, which is around 28. So if you have a 5-minute close below, say 28, then I would just bail in the position. You made a quick trade, super quick day trade. You probably walk away with 150% return. Right now, you're up 200%. 150 is not bad for a day trade. So with that being said, I would say, yeah, let's hold the position right now until the price action says otherwise. But I wouldn't want to hold this beyond today, because you've already had a sharp move on the first day. And that sharp move on the first day allows you to come out of it for a very quick profit and not have to hold through the 17th. Keep in mind the 17th, FOMC on the 15th, major OPEX, quarterly, monthly.
All right, guys. So we're going to take a little pause here because I'm getting some questions here about the actual option school. So for you guys, if you've never seen this before, we do have a Benzinga Options School with Chris Capri. He's the chief educator at the Option School, basically doing these live classes Monday to Friday, pitching trades, talking about trades with the students. And Chris will provide trades as well. It does come with Benzinga Pro. So even if you have Pro, like hit me up. I'll still try to get something worked out for you. But it does come with Pro. So the Option School comes with Benzinga Pro, and it also comes with a laptop. But you do have to sign up, within this session. Just heads up. All right. So any questions? I'll put the contact in the chat, guys. In the meantime, let's go ahead and get back here with the session.
Monthly OPEX. So I would say just take your profits for the day. If you get that close below, be done with it. If it keeps riding and moves higher, then keep riding it. So yeah, hopefully I answers your question on that, Sean. It's a good trade. Nicely done on that. Jim C says sold IWM Iron Condor 185, 178, 169, 162. Let's take a look at that trade. 185, 178, 169, 162 strikes on June 17th for 558 credit. Not in the play, looking for idea and insight with the market poised down. I believe audio and come back to retest. The challenging thing about this one here, Jim, is that your expiry is after the FOMC. And we're expecting a big burst of volatility after the FOMC on the 15th. And so I would consider recalibrating this trade for the 15th instead of the 17th. My one concern is that your upper strike is 185 and the market's already at 185. So that to me seems problematic to some degree. Let me look at it and see if we can reconstruct a different trade. So prior to today, IWM has 2.4 million calls and 5.5 million puts, more puts than calls. And it has about 12% of the options expiring on the June 17th OPEX. I see resistance starting to come in around 190. So let's take a look at the flows on the day and then see if we can kind of get an idea if there is a way to construct another way to construct an Iron Condor. So prior to today's 8 million options, it's only done 400,000. So it's only 5% of the total open interest. Traders are buying more calls than they are selling. So that's bullish. Mixed on this here. So probably coming into resistance, very similar to SPYs. So let's see if we can reconstruct a different trade. We'll try maybe a June 15th. And if we think 190 is going to be resistance, yeah, so far this is really bullish on the day. Yeah. So, yeah, it's starting to get some good resistance between, say, 190 and 195. So maybe we adjust the strikes a little bit. So let's try this a little bit and see if we can figure out a way to make this trade. So I would probably sell the 190s Iron Condor and then buy the 195. And then to the downside, 180 maybe. Yeah, 180 is pretty good support. And then we could have something below that. So like a 180, 175. Let's see if we can get something there. So 180 and a 175. Okay, so 242 credit. Let's analyze this trade. Not the best R to R on this one here. Yeah, not the most favorable R to R. So for June 15th, so right now the market is saying we have about a 42% chance. Yeah, market's saying 42% chance. And with the credit on this being less than the max loss, this probably has negative expectancy. So yeah, I think we need to wait on this, Jim. Yeah, I think we need to wait on this. I think, I would pass on this trade because it's going to have slightly negative expectancy on this. With that being said, there might be an opportunity to trade IWM similar to the way we're looking to trade SPYs and Qs this week is let them rally a little bit, then sell. And so then we can look at that as an opportunity to maybe fade that as well, because that 190 to 195 looks pretty stiff. You can see it here on the weekly. So here's like 190 and there's 195. That's a lot of meat for it to get through. So maybe let this rally a little bit and then fade it heading into the FOMC. We can't imagine traders are gonna want to hold a long, bullish exposure going into the FOMC. There's just too much risk on the event. So the closer we get to FOMC, the less they want to hold it. Therefore, the bullish positions come out of the market. So yeah, that's what I'm thinking on that one there, Jim. It's a interesting idea, but let's revisit that one. Yeah. Long call SPY 410 strike at 3.1. I don't know what your expiry is, Monarch. So can you give me the full details on this? So remember, long SPY calls strike at expiry for how much? Otherwise, I have no idea what the expiry is or anything like that. So give me a little more details on that, Monarch. Farouk says, let's revisit apps, which cross view up with a gangster move up. Long bear put spread apps. So 22.20 for this Friday. Let's take a look. Oh, good, Monarch. 22.20. Yeah, maybe. So it had... Just looking at apps on my end, on my app. A lot of options rolling off this Friday because of the a lot of options built up for this earnings. So you want to buy the 22s and sell the 20s. Yeah, I think that's workable. I think the way we need to consider this, Baghdadi, is so far we have a potential close right here, 5-minute close, but there's still, like, this is a pretty impulsive move. Losing the 9 EMA and the 5-minute, that just means there's a short-term reduction in momentum. Losing this would be a little bit better. So what I'd like to see is maybe a bounce, weaker high and lower volume, and then a break, and then we can look to do the bear put spread. So I'm not ready to short this yet because I don't, like, this would basically be saying, hey, I think the move is done for the day. And I'd like to see a little bit more evidence than 10 minutes worth of candles to say, hey, this is the end of the move on the day. So I like the idea of fading this, but I'd like to see a little bit more transitions in the price action before we take this play. So decent idea. We just need to wait and let this develop. So Monarch says, okay, he wants to buy the 410 calls for this Friday, June 3rd, expire for 310. Let's take a look. You're right at the... Yeah, you're right at the monthly view op. Short-term price action suggests that there might be a little bit more upside. Monarch, is this a day trade or would you actually hold it through tomorrow? So what's the intention on this? Is this intention just a day trade, get in, get out by the end of the day? You're already in. Okay. So it's a day trade. Okay, so you want to get in and get out. So let's take a look at that. So June 3rd expiry, the 410 calls. You bought it for 310. So right now you're up 40 cents. I think you're okay for right now. You're gonna eat some serious theta on this if you hold it for too long. So my recommendation on this is be very sensitive to the price action on the 5-minute right now. I don't know why. Hold on one second. Let me why is it not giving me my indicators? Huh. Okay. All right. So let's see if I can get the indicators on the rest of it. So yeah, for right now, keep an eye on the price action on this on the 5-minute. Let's take a look at my scalping charts on SPYs. Boom. Okay. So I think you got another leg up in SPYs right now. Yeah, I think you got another leg up. So I would keep your eye on the 1-minute and 5-minute on this. Yeah, impulsive, corrective, probably got another leg up. But once you start getting into 415, it'll start losing momentum probably. So yeah, hold this right now until you get a 5-minute close below the 20 EMA. I think the next leg is up. It's holding this right now. I think it wants to break this on the day. And if it breaks this, then you have room to like 414, 415. And then at that point, I would start looking for transitions on the price action, then be out of it. We want to be out of this by 2 hours before the market close, because remember, theta isn't always taken out at the end of the day. Sometimes brokers will take out the theta on that before we get to the end of the session. So you want to avoid taking a $1.72 hit in theta on this. That's a lot for a 330 option or 310 option. So you want to avoid this theta as much as possible. So you need to hold this till about 414, 415. If you get there and there's about 2 hours left, I would say just take the profit, avoid the theta decay. If you lose $1.60 on a 370 option, that's a massive chunk just for holding it overnight. So that's my thoughts on this. See if it breaks the intraday, the pre-market highs. If it does, yeah, I think this is gonna keep pushing. Yeah, I think this keeps pushing. So we need to clear this. If you clear this, then you should have a decent push on the day. And with VIX now sub 25, that should add a little bit of fuel. So you need to clear 412.50. If you do that, you should have relatively smooth sailing from there on out. Yeah. It's a good trade. I like it. I like it. Just on this one here, keep a mindful eye on it. We want to take our profits and be out of it once we hit our zone. Yeah. Okay, what else are y'all looking at? We've covered all the trade ideas. We have covered our live trades for the day. We covered our market commentary. You guys know our playbook on GME. GME's probably got one more leg up at best. You know our playbook on SO. You know our playbook on Oxy. You know our playbook on XLE. UNG, we're not quite ready to get long on this yet, so we're going to wait on that. And you know our playbook on Qs. So what other questions y'all got? You can just do open Q&A right now. Again, we already have one trade today. We're targeting 2 to 3 more trades on the day, maybe 4. But between now and the end of the week, we want to get about 6 trades. That would be the idea. Some of them will be directional. Some of them will be selling volatility because we'd like to take advantage of the high volatility right now that we think will be coming down next week. We expect volatility to compress next week, being the week before OPEX and the week before the FOMC. So we want to sell volatility while it's rich and then hold some of that short volatility. Jeff D says, I have sound. I'm glad to hear. Okay, so open Q&A. By the way, I have to stop 5 minutes early because I have a very important appointment after this. So we have about 12 more minutes of the live session, and then we'll take our break, and then we'll do our second class on the day later today. So remember, our second class on the day is on single legs. We're going to talk about single leg strategies and how to maximize your profits on single legs, long calls, long puts, short puts. So let's see, Chad and Farouk are typing, so we'll let you guys kind of hammer out your questions. Chad says, hi, Chris. I have a June 3rd Amazon 2,500 calls for 850. Do you think I should hold through tomorrow, expecting a run tomorrow because of the split? Let's take a look. 2,500 calls. Short term, I think this is probably going to have a little bit of a leg up. We need to look at the details. So prior to today, Amazon had 560,000 calls, 420,000 puts. There's a lot of options. About a third of the options are expiring this Friday. So you're going to be under a lot of pressure as the day goes on, that a lot of these options are going to come out of the board. So let's take a look and see what the flows are on the day on Amazon. And 276,000 options. So on a stock that has about 1 million options, 25%, that's strong. Flows are very mixed on the day. Mixed. Yeah, what's share volume at? Share volume is mild. It should probably hit the 10-day average by the end of the day, but nothing gangster on that. So, let's take a look. So you got June 3rd. How much did you pay on them? $850. Okay, so you're almost doubled your profit. So it's a nice trade so far. There's a lot of volume here, and then not much beyond this. So this is the largest by strike on volume on the day. It's the second largest by open interest. Yeah. So here's your big strikes on the day, 24.50, 25. This right here is kind of mild, this 25.50. So I think at 25 it starts to struggle because there's just not a whole lot of volume or open interest there. Like it would need a very big push. It would need a very big push. The one advantage it does have is beyond 2,500, there's just no interest short term and puts. So beyond this, the calls are in control. Beyond 2,500, calls are in control. That may create a little fluidity, but I think at this point, beyond 25, I think you're running on thinner air at that point. So you have massive theta decay, massive. So unless you get an absolutely gangster move, like right now, your calls are worth 1580. So you're almost double your profit. Look at your theta though, $14. Literally almost 100% of the entire trade will be gone. So no, I wouldn't hold this. I would not hold this. I would say watch the price action up till between now and say 11 o'clock, which is Pacific, 2 hours before the market closes. And at that point, you need to be taking profits on this. You're going to have too much theta decay. Short term, the price action is supportive. If it starts to struggle here, you may want to consider closing. I would say if you're lucky, you make it up to 2,500. So this would be like best case scenario on the day. It's not that it couldn't go beyond that, but I think it just starts running out of steam. So you need this to make a gangster move soon because that theta is going to start coming out in 3 hours. Like in 3 hours, 4 hours, you are potentially exposing yourself to losing all that theta. So watch the short-term price action, and that's pretty much it. Yeah. Yeah. Okay. A few more comments, and then we'll call it a sesh. Farouk says, any chance we could enter positive gamma next week? We would have to break above 420, maybe 425 to enter positive gamma. The way I'm seeing the buildup on positions on SPYs, we have to at least get above 420. So I think it's a very low probability event. Keep in mind, gamma started off it was negative, but pretty low. Like we were like 300, 400 million to start the week. We've actually increased negative gamma as the week has gone on. That's what I was talking about in the newsletter. So remember in the weekly newsletter that we posted right here in the option flow report, we said, look, massive reduction in puts. That may kind of create a skew where puts become cheap and traders want to start buying puts ahead of the FOMC because they're at a discount right now. So we had said in the options flow report that y'all get on Sundays that we felt like traders will probably start accumulating puts this week. That has manifested exactly as we expected. So because they were buying puts, those are negative delta trades. Those are negative gamma trades. So that increased the negative gamma on the week. So we think that it's a low probability that we hit positive gamma this week. Maybe we can get to neutral gamma by next week, but I think it's a low probability event. Traders are going to want to hold the long puts going into the FOMC. So that just increases the negative gamma. So yeah, I think we have to wait until after the FOMC. And yes, J Powell, whom we affectionately call the human Xanax. Remember, if you have sleeping problems, just listen to J Powell speak. Your sleeping problems will go away, no problem. So yeah. I think we have to wait until the FOMC. I think traders are going to want to hold long puts. Therefore, it'll keep the negative gamma pressure. Yeah. Renew has a question. Do you think that there's another chance to go short on Facebook since it's going back up? Yeah, we just want to wait. 200, maybe 220. So I have alerts on it right now. If it gets into those prices, we'll look at it. So yeah, we just need to wait until it gets up into the levels that we want. Profit Taker saying, I feel that SPYs is only temporarily bullish, overall bearish. That's what we said in our market commentary, Profit Taker. Yeah. So we have the same sentiment. When do you expect price action to return to sub 400, or do you? I think it's going to be hard to break 400 this week. So we put in our morning market commentary. We put there that said, look, we expect this 400 to be our support on the week. That's like our biggest support. So as you all remember from the morning market commentary, we said, hey, We think with the open interest building and collating around 415, 420, we think that 420 is probably one of our better case scenarios for the week. And we feel like 400 is probably our major support for the week. So we don't think we're going to return sub 400 this week. As we go into the FOMC, possibly it would depend on how bad a close we have this week. If the market stays above 410 by the end of the week, then you're going to see more and more consolidation happen in the price action and therefore flows. So think about it like this. So there we go, 1 hour chart. So with this corrective structure over the last 3 sessions, the more price consolidates in a corrective structure, the more the open interest starts to move towards that level, right? It moves towards this consolidation. And the more the open interest starts to collate around this corrective structure, the more that compresses volatility. So what did we say today was the likely scenario? We think it has one more leg up. And so far that's manifesting right off the bat. And so if it closes sub 420, then, I can see more and more positioning. Like if we don't break this, then they're just going to see more open interest build around these levels, which further compresses volatility. If we happen to get a break of 420, then that should start bringing calls up to some degree. Keep in mind, would you really want to be holding a whole lot of long calls going into the week before FOMC? I don't think so. So I don't see sub 400 till at least next week. And we would have to have a close below 410 or 405 this week to potentially even have a sub 400 next week. So that's kind of what I'm thinking right now, Profit Taker. We have to see how this week closes. Okay, got 3 more minutes. Jeff D says, watching Boyle, I've been told that it is a window maker, so I was looking at calls. I don't know what you mean by a window maker. But no liquidity sometimes can become spare. Yeah, Boyle is very low liquidity. So just to let you know, from the option side, less than 50,000 options across all strikes and all expiries. That's very, very low, like very low. Share volume also pretty low. So I tend to avoid Boyle just because if you go into Boyle with a decent size, 20, 30 contracts or something like that, you might have a hard time getting out. So I just avoid it completely. My suggestion is you can trade shares on that, but I would avoid trading anything above 2,000 shares because you may have some issues with liquidity on that. So for right now, I tend to avoid that. TechSavvy says, is that Thinkorswim you're using? Yes, it's the same thing. We always use Thinkorswim, yes. Jeff XY, good to see you. UNG levels for the pullback for Oxy. We covered that. So it's we covered that. We're waiting a little bit lower on UNG. We're not there yet. Same for Oxy, same for, we're waiting for a little bit more of a pullback on these suckers. So yeah. Okay. I got to end it about 5 minutes early because I have a super important appointment in 5 minutes. So I have to hit the loo. But very good session today. Just to recap, we expect SPYs to have another run up on the day, probably to stall between 415, 416 on the day. Keep in mind, if it did get to, so it opened right here, a move to 416 would be at our implied move on the day. So we think its struggle is around 416. We think that's probably the high on the day. We want to sell Qs once it starts hitting this resistance between 312 and 315. VIX now, if it closes below 25, there's a chance for it to provide a little bit more fuel to SPYs, but VIX would have to be at 20 for SPYs to break 420. So we think SPY stalls at 420 on the week. UNG, we're going to buy us on a pullback. Same with XLE, Oxy, SO. GME, we're going to fade it as it go higher. We think GME has one leg higher. And we think Amazon at best hits 2,500 on the day. Okay, so that's pretty much it. Very good session, everybody. I will see you all this afternoon. We're going to be talking about single leg strategies, how to maximize those, how to use the convexity to your advantage, and what are the best structures to really be trading those. So have a good break, everybody, and I will see you all in a few hours. Take care, everyone.
All right, everybody. That was the option school class today, single leg option strategies with Chris Capri, lead trader, lead educator at the Benzinga Options School. If you want to trade with Chris, if you want to learn with Chris, about options, specifically about options, take the deal. It's $7 for 7 days. You're not going to find anything cheaper than that. However, even though it's cheap, it's still valuable. It's going to help you become a better trader, not just in options, but a lot of other stuff. So the link is in the chat, guys. If you want to click it, it's $7 for crying out loud, guys. $7 for 7 days. Take the deal. Take it. You're going to love trading and learning with Chris. You have classes Monday to Friday. You get Benzinga Pro included. You get a free laptop if you join here live. Once you sign up for the, once you complete the 7 days, right? So 7 days for $7, try it out. I'm 100% sure that literally, I mean, it already pays off by itself, those $7, to be honest. Let's be real, guys. So if anybody does have questions, reach out. I'll put my email there in this thing. Okay. All right, so I'm gonna put that there in the chat. Feeling a little bit under the weather today, so I'm not gonna, be doing this for too long. But just reach out if you have questions, guys. And if you want to, talk with Chris, trade with him, learn all that stuff. Doors are open. Balls on your court, guys. $7, 7 days. You have questions, reach out. Have a great day. We'll see you guys soon.